That's been a more steady march upward since late last year. And when you look at economic indicators as a whole, right, you can watch them in rate of change terms, right? Rather, before they go negative, they start decelerating at a positive rate. So they've been accelerating, then they start slowing down while they're still growing. And some of them tend to be more leading than others. And so you see things like manufacturing activity start to slow down early. You see other signs of liquidity start to slow down early. And the labor market tends to be one of the later signals. It's kind of lagging or coincident with recession by the time that really rolls over. And so that has been one of the more resilient areas in the economy over the past year, really, as you've seen a lot of other things decelerating since late 2021, and labor's held up, which is not unusual for that to be kind of on a big lag. What made this cycle somewhat unusual, though, is that a lot of times you see labor weakness in some of the lower income type of jobs, whereas in this environment, because certain sectors are so interest rate sensitive and interest rates have really been what's driving this kind of deceleration, you've seen the layoffs more in tech, more in real estate, finance, kind of these types of areas where, if anything, some of the lower income jobs are still facing shortages, still facing outright shortages in some cases, and I think the wages are going up rightfully. And so you see kind of a bifurcated market, almost two different types of economies out there. But I think that we are kind of increasing evidence towards recession, and some of these recent labor market prints are kind of pointing that way now. I don't know about all industries, but I do think it is broader. I think you can only have so many one-offs until it's clearly a trend. We've seen that in tech. We've seen that in parts of finance. It is interesting that it's starting to hit some of these less interest rate sensitive areas. In some cases, they did just accumulate extra labor compared to what they needed. Especially when labor is scarce, you kind of hire first and figure it out later. So I think there's some of that normalization, and some companies will be more affected than others. But I do think we're starting to see kind of a broader deceleration. And like I said, it won't necessarily impact every industry, and it certainly won't impact them all equally. But I do think it is the things tend to spread because, for example, those laid off tech people, they will travel less. They'll go out to restaurants less. They'll there may be not directly impacting something like McDonald's. That's a broader story. But basically, when you see people lay off one sector, even if other sectors are not the epicenter of it, even if they're not being hit as hard, they're still impacted by other people losing their jobs. So I think that certainly labor pressures, higher wages, incentivize more automation. I think that's been really clear in the grocery store market, where you see fewer and fewer human cashiers and more of those automated checkout areas. We're seeing that hit fast food restaurants more as well. That's not a surprise. The McDonald's case, I mean, they still need people in the back, until robotics gets advanced enough that you don't even need people cooking. But certainly ordering and things like that can trim certain types of labor and make that more efficient. So I do think that automation and AI is, it's already been a multi-decade trend. I mean, you can go back to the 2000s and the 1990s, and automation was already there in certain sectors. As it gets better and better, it can displace more types of jobs. I think that some of the recent advancements in AI we've seen can replace some types of, say, repetitive white-collar jobs. Especially, give it a few years as it sorts things out, gets more efficient, more accurate. I do think those are disinflationary kind of anti-labor technologies that take out certain efficiencies in the market, but then hopefully they create other opportunities elsewhere.